Everyone is talking about earning their first crore. There are tons of YouTube videos on this topic, and this is probably not the first time that you are coming across this topic. It's been sold as the ultimate financial milestone, but guess what? First 10 lakh rupees is the hardest, and here's the psychological trap that keeps 99% of people from ever getting past it. You're earning a good salary, you're saving a bit, but when you look at your portfolio, you feel like you're running on a treadmill. You see stories of people hitting their first crore, a small voice in your head asks, what am I doing wrong? The single biggest lie in personal finance is that slow and steady always wins the race. It doesn't. It guarantees that you'll be working for 40 years. The truth is, you got to take risks in life. But what kind of risk? My name is Vikas Kulkarni, and this channel is all about documenting my own journey of building a portfolio of 1 crore by the end of 2027. I am not a SEBI registered advisor, and this video is only and only for educational purposes. My only job on this channel is to show you the exact blueprint I used to build a 50 lakh rupees portfolio by 25 and the one I'm using right now to get to a crore. You get to see the wins, the loss, and the entire system. In this video, we're going to do two things. First, we'll break down exactly why your net worth accelerates so dramatically after the first crore. I'll give you the exact 4-step blueprint that I'm personally using, the roadmap you can use to get there fast. So let's get into it. So why is the first crore the toughest? It comes down to 3 key reasons. The first one is the most powerful force in finance, the magic of compounding on a larger base. We've all heard of compounding, but let's visualize what it actually means. Compounding is like a snowball. When you start, it's small, you roll it, and it picks up a little snow. It's slow work, but as the snowball gets bigger, every single roll picks up way more snow than the last one. Your first crore is you building that snowball from scratch. It takes most time and effort, but once you have a 1 crore snowball, the growth becomes massive. Let's look at the math. Assume you can get a 12 to 15% annual return on your investments. To get from 0 to 1 crore, assuming you invest 50,000 rupees per month, it will take you about 10 years. That's about 120 months of SIPs and discipline. But watch what happens next to get from 1 crore to 2 crores. It won't take you another 10 years. With your 1 crore base already compounding at 12 to 15%, you'll get there in just 4 years. From 2 crores to 3 crores, it's just 3 years. And from 3 crores to 4, it's roughly about 2 years. Do you see the pattern? You spent a decade on the first crore and just over a decade on the next 3 crores combined. That is the explosion. Your money starts working harder than you do. That's the game we want to play. The second reason is the shift that happens right here. Having a 1 crore net worth is a massive psychological cushion. The fear of what if I lose my job or what if there's an emergency reduces significantly. That constant financial anxiety starts to fade. And this newfound security allows you to change how you approach risk. You're no longer playing defense with your money. You can start attacking. You can take more calculated risks with a portion of your capital, say 10 to 20%, for a potentially much higher returns without risking your core financial stability. And that brings me to the third reason. Your investment options expand. Many of the best investment opportunities are simply not available to people with small capital. With a corpus of 1 crore, doors open up to things like angel investing. You could even consider investing in early stage startups where the risk is high, but the potential for multi-bagger return is also enormous. And also real estate. You can start looking at actual down payments for investment properties that can generate rental income and appreciate in value. You can also look into portfolio management services where a professional fund manager handles your portfolio directly. Many have a minimum ticket size of 50 lakh rupees, and this ability to diversify into different high worth asset classes is a powerful accelerator that most people just starting out don't have access to. So the math works for you, your mindset shifts, and your opportunities expand. That's the why. Now let's get into the how in the part 2 of this video. This is the exact 4-step framework to get you to 1 crore as quickly as humanly possible. Think of these as 4 wheels of your car. You need all 4 to move forward at a high speed. Step number 1. Maximize your earning potential. The first step, and the one we cannot ignore, is to maximize your income. I just cannot stress on this enough. Please Do not make the mistake of trying to optimize for the best returns with an SIP of just 5,000 rupees. Your income is the engine of your wealth creation. The more horsepower you have, the faster you'll get to your destination. Relying on investing alone with a small income is like trying to win an F1 race with a Swift. So, how do you do this? Upskill relentlessly. Identify the skills that are in high demand in your industry and master them. Learn to create more value for the company. In this age of AI, it's easier than ever to learn anything you want for absolutely free of cost. I would still suggest take up some certifications, Udemy courses, workshops, invest in yourself, and your active income compounds real fast, especially if you are in the first few years of your career. Second, consider career switching. If you're in a low growth industry, have the courage to switch. Fields like technology, product management, and finance, and even niche marketing roles in India are paying good to premium salaries right now. And third, build a side hustle. Use your weekends and evenings not just for content consumption but for content creation. Freelancing, content creation, consulting, and an extra 20,000 to 30,000 rupees a month can supercharge your journey. But having a powerful engine is useless without fuel. And that brings us to the second non negotiable step. You have to build a financial fortress by saving aggressively. I'm not talking about saving 10% or 20%. To get to 1 crore fast, we need to aim for a savings rate of 50% or more of our take home pay. I know that sounds insane to some people, but you can always start with 20% or 30% and gradually increase. Even reaching 40% puts you ahead of 95% of investors. But this is about making conscious choices. It means number one, ruthless budgeting. Track every single rupee, know where your money is going. Number two, avoid lifestyle inflation. When you get a raise, your savings should get the raise, not just your lifestyle. Number three, avoid debt for depreciating assets. The new iPhone, a fancy car on EMI, these are all anchors that will slow you down. If it doesn't make you money, think twice before taking a loan for it. Saving 50% of your income is amazing, but if you just let that cash sit in a bank account, you're actually losing money to inflation. And that's where the third and most powerful step comes in. Step number three is being strategic and aggressive in your investing. This is the accelerator pedal. For a young investor with a long time horizon, your best friend is equity. We need an aggressive, equity heavy portfolio designed for growth. For someone like ambitious Aditya, our target viewer, a sample allocation in the Indian context could look something like this: 50% in Nifty 500 index fund for stable market tracking growth, 30% in a mid cap fund to capture the growth of emerging companies, and 20% in a small cap fund for high risk, high reward potential. But how do you invest consistently with a systematic plan or SIP? It's disciplined and it automates your investing. But we're going to use a special hack. This is my single best tip in this entire video. It's not just a SIP, it's a step up SIP. Here's how it works. You commit to increasing your SIP by a certain amount every single year, ideally matching your salary hike. A 30,000 rupees monthly SIP will get you to 1 crore in about 11 years at 15%. But a 30,000 rupees SIP that you step up by just 10% a year, you hit 1 crore in just over 9 years. You just shaved off almost 2 years from your journey with one simple automated tweak. And on a longer time horizon, this effect is even more pronounced. This hack puts your wealth creation on autopilot and is your single greatest weapon against lifestyle inflation. The step number 4 is discipline and patience. The market will go up, the market will go down. There will be times you'll be tempted to sell everything. There will be times you'll feel like you're not making any progress. And this is where you need to zoom out, remember the plan, trust the process, stay consistent with your SIPs month after month, year after year. That is the final secret ingredient. So now you have the complete 4-step blueprint. You know the what and the why, but the single biggest reason people fail on this journey isn't the strategy, it's the execution. It's staying disciplined month after month when the market is scary and your goals feel distant. So, in the next video, I'll show you how to build an all weather mutual fund portfolio and show the funds that I have personally invested in. Hit the like button and subscribe to the channel so you don't miss it.